Let's start from today. So we are just going to cover all the things from financial sector. We are not going to leave anything. We are just going to touch each and every part. In that, the first part, we are just going to see about how you can manage your money in your 20s. So that's where we have some concepts called as this money, money smart at any age. How it really works, like what is exactly a money smart works, and what all the key features are there. So let's see that. So so money smart is like nothing but you just earn a money, like in some way you're just earning money, like by doing work or anything. You know how the money will work. If you see the life cycle of money, it's going to be you're going to spend the money at any time. For example, like a lot of people would have been seen, they would be saving a lot of money, but they won't invest or they won't buy something. It's going to grow. What will happen is automatically something will happen so that they have to invest the money. So this is called that a money cycle. So money cycle, this is the real concept you will be see in every place. It's like a cycle. You will earn and you will spend, and by spending it can be depreciate or it can be appreciate, and again it's going to be in the process. So it's a cycle. Money is a cycle. So you people, even you can take your real life scenario, just sit and think in your real life. You would be earning $100, okay, and you would be saving it for nearly 2 years. You just imagine, you just saved it for 2 years. Suddenly you got some emergency or something like you just urge to buy something or anything. Somehow the money will be flowing out of your pocket. Somehow it will go up. So that's the cycle of the money, because somewhere you are earned it, you just got it, somewhere you need to spend it. So that's where smart money concept will come inside. How you have to spend your money. See, spending your money, there are a lot of ways are there. Like for example, you have a money, there are a lot of ways are there. So buying a liability, buying an asset, like lot of ways are there. In that we can take a two category, which is the main category. Like you're going to buy anything. For example, you're going to buy a car, you're going to buy a mobile, you're going to buy a house or anything. It will come under this both category. You know one thing, a lot of people would be thinking, buying a house or buying something which is like asset, they will be thinking like it's an asset. But exactly, if you go deeper, even asset can change to liability if you don't have the smart move, if you don't know what exactly it's going. For example, let me say, for example, I am a content creator. For me, if I'm planning to buy an for example, if I want to buy a Mac laptop, like imagine you're just buying a Mac laptop. Just imagine, with the Mac laptop, you're just going to generate money. Because you're a content creator, you're just going to give a quality content. By quality content, you're just going to earn money. So it's going to be like a cycle. So this cycle will happen in everywhere. So, even the liability can change to asset if you do a smart move. If you do a smart move, a liability can change to asset. If you are not smarter, even the asset can change to liability. I will say an example how asset can change to liability. For example, you just bought an house, okay? Just for example, if you are buying a house, you will be getting a rental income of $100. You just imagine, you just got a rental income of $100, and somehow you just paid for nearly 5 years or 10 years or something like that, and suddenly you got any emergency situation, you can't able to pay this EMI. What will happen is, bank will take over your house. This is like one of the worst thing. These things can happen if you don't have the pre-plan. For example, if you buy a house, with that house, if you have a rent, because a lot of people, they will buy a house for themselves. Like if you go with a flat, if you're just going to buy a house for yourself, you need to pay money from your pocket. So if your money getting stopped by if any emergency, or if you're not working, or if you are if you want to take a break, you won't have money. On that time, you will stuck in a problem. So for example, if you're buying an individual house, and if you're having 2 floors, in one floor you're just staying in that one floor, and in the ground floor, if you're giving it for rent, you're just going to earn that money, and you're just going to spend that money to pay the EMI. So that's the smart move. But a lot of people, what they will think is, they're buying an apartment and they are just going to move on like that. They will be planning without a proper plan. But some people, they would be having a proper plan. Even if they're buying an house, they would be invest some money on SIP, on equity, or some other way. They would be putting the money which is going to generate them. So like that, if you're a little bit smarter, even your liability can change to asset. Even for example, as a content creator or anything, for example, even buying a car is liability. Car value will depreciate. But with the car, if you can earn money by, for example, renting your car or buying a car and giving rental and getting a rental income by the car, these are all going to generate you money. So that liability can change to asset. So everything will come under your hand, whether the liability or asset, it's totally depends on how you are going to move. In that, we just have 5 pillars in financial intelligence. What are all the pillars? First thing is earning. Let me go with that. So 5 pillars are very simple. Like already I've said you this, money is like a cycle. So if you spend on this way, your move will be very smarter. First, you're just going to earn money. Earning is nothing but in any way you're going to earn money. By doing work, by doing business, or by doing any kind of thing which is going to generate you money, you're just going to earn it. After earning, you're just going to save it. How you can save? A lot of people are thinking saving means having money in your hand. Again, I'm saying a lot of people are thinking this, but you know what is the real saving? Investing your money, spending your money is the real like saving your money. I will say you how. For example, like a lot of people will think I'm just going to buy a car after 10 years or 5 years. If you're saying every year $100, you know what will happen is your money, like if you see each and every country has an inflation. So if the country is having inflation, you can make sure your money value get depreciate at any point of time. Like in each year, you're just going to get depreciate at any point. It's like, you know, like some calculation is there. If you're putting that, you will be getting what is your deflation of your money. But I'm not going deeper into that. I'm just going to see the top view. If the country is having inflation, you just go and check on the Google whether your country is having inflation or not, because some countries are they don't have inflation, they have the deflation. On that countries, you need to, like, you know, you can, even if you're saving money it's fine, if you're not saving money it's fine, because nothing is going to affect you, because your milk value, your car value, none of the value is going to increase, because your money is, like, you know, your country is facing deflation. So if your country is facing deflation, you no need to, you know, like spend your money, you can save it or you can do whatever you think. But if your country is having inflation, you should not hold your money in your hand. So you need to be very careful in this. You should not hold your money, you should spend your money. So that's where I'm just going to say you where you need to spend. See guys, spending money, it's very important. Apart from keeping money in your hand as a cash, spend your money which is going to earn you more money. For example, equity will earn you money. Spend your money in gold, spend your money in silver, spend your money in business, spend your money in somewhere, so that you're just going to be, like, you know, you're going to be in the cycle, so that your cash flow would be there inside your pocket. You will have some cash flow. If any emergency, you can sell it and you can come out. Any emergency, you can do that. But if you're holding your money in your hand, you will miss out something like the, you know, the money will get deflation every year if you're in the country where if you are facing inflation. Okay, so spend your money. The real saving is spending your money in a right way so that the money can earn for you. So that's the second pillar. And third one is investment. Again, I send you, spending in the right asset or right liability will give you the nice amount of thing. Next one is investment, like third one. So investment in the sense, you're just going to spend your money. It can be gold or it can be silver or it can be anything. But a lot of people, what they will do is they won't have their proper, you know, emergency fund and the proper asset allocation. So what they will do is they will be investing 1 or 2 months, and next third month they will sell off everything and they will take it. So it's not the proper mindset. For example, if you're going to, you know, want to get and feel the real value of what you just earned and what you just saving in the sense what you have just spent, you need to know the proper investment plan where you're just going to invest. As I told you, you just invested on some asset, same time you need to hold that for longer time. Even if you're doing like it, you're just invested on business. If you're investing on business, same day, same night or same month or sometimes same year, it's not going to get it. It's going to take some time. It will take some time to take over. It's going to take some time to give you the big yield. So you need to give some time to, you know, give you the result or the yield what you are just going to earn. And next time, like you just invested for one time, and you should not leave like one time investment. Each and every time you're just earning, have some money, have some allocation, like spending for yourself, spending for your skill set, spending for buying real estate, or you can use your money to spend somewhere, so that your investment will start growing. For example, if you're buying a house and if you're paying rental income for EMI, and your asset price will increase, same time your EMI will get cleared by your rental yield what you're just going to get. But a lot of countries are there where your rental yield would be very lower. So on that scenario, you can go with equity, you can go with the fixed deposit, or you can even go with gold and any kind of top tier assets you can go. Because in if you're investing on real estate, if you want to sell it today, you can't do it. But gold, fixed deposit, equity, these things, if you can sell it immediately, you can liquidate very easily compared to house. Because if you want to sell a house, it's going to take 1 month or 2 months, 3 months, years, like even it can take a decade. So everything it depends on what you're just going to invest. So investing is also, it's very important to choose a right product for a longer time. So if you come to the investment part, I will say you should focus on timing. You should focus on the long term. It's not like today and you're just going to sell it tomorrow. It's not that. You're just going to do it continuously and hold it for a longer time, which is going to give you more yield. So that's how you can make your money grow. Next one is protect. See guys, a lot of people are missing out on this point. See, you just spend your money, savings. I just said you the part. In savings, if you want to save your money, it's not only saving something which is going to help you to grow your money, something which is going to help you to grow your health. So insurance, like protection, is nothing but insurance, which is nothing but a lot of people are missing out this. You should put your own health insurance or house insurance, car insurance. Like these are all going to protect your capital. For example, you just spend your money in your asset and your investment has been grown for a longer time. After that, if you don't have this protection, if you don't have insurance for your family or for something which is going to destroy your money, then whatever the three pillars you just followed at the first, second and third, it's going to destroy in overnight. So protection is very must. For that, you need to insure. Not only in this protection, even if you're buying any asset, you need to protect within proper diversification. You should not put all your eggs in one basket. So even in that part, you need a protection. Even your health, you need a protection. So have an healthy product, eat an healthy food. You just have an proper insurance. You just have an proper insurance of whatever the assets or whatever the liabilities you just have, so that you don't need to give more money if any collateral damage happen inside that. See, I'm not saying it's going to happen. I'm just saying these are all going to secure you if anything happens without your knowledge, because we can't guess what can happen next in our life. So insurance is going to protect you. And the final part is a learn. Already I said it will come under save. Like save is nothing but spending. Guys, a lot of people, even they just missed in learning. They're just thinking whatever the knowledge I'm just having now, it's enough. It's not at all right. You need to invest your money on your knowledge. Like each and every time, invest on something which you can improve your skill. It can be anything. For example, choosing a nice, insurance product. Invest your time and learn something, and you can choose the right product on you. So like that, learning can give you the big exposure to view the things which you can invest your money, whichever you just earned. You just split out into 4 parts. See, you just earned it. After earning, just split out into 4 parts. One is save. Save is nothing but spending for yourself, spending for your liability or your expense or anything, and put some money on the investment part for longer term, and some money for protect your own money, whatever you saved and invest. And finally, you just invest your money for learning. Learning in the sense, you can put your money for learning for each and every part, improving your skill, getting a promotion in your company, or learning something which is going to help you to improve your knowledge. In this scenario only, we just came to one thing where we just introduced the Sumbix, where we are just going to make you to learn about quant finance, where 1-to-1 section I will be there, or my team people will be there to teach you how to use use your AI models like ChatGPT or other models, how to simplify your work and make your own trading bots and algorithms with AI. So if you want to learn that, you can text me on Telegram. Our team is there to help you. Even I'm there. We will be there to help you. So if you're there, you can go there. So learning will help you a lot if you're going to learn. Now we can come to the next part. These are all the golden rules you need to follow, guys. First thing, earning. After earning, split your money into save. Save is nothing but spending. Spending is the real savings. That's what, if you ask me. And next one is investment for longer term. It's not like, today and investing, tomorrow closing. It's not. And the third part is like, we are just going to protect our earnings by having the right insurance and right policies and everything. And finally, learning. You need to have the financial knowledge, or you need to have some skills to improve your knowledge. So these are all the golden rules for you. Okay, so we can see on the next part.